Today on the CEO Barbecue, we're looking for gold and copper in Southern Africa together with Kavango Resources. And if you want a bullet point summary of this conversation and all the other CEO barbecues in your inbox once a week, go to resourcetalks.com and subscribe to our free newsletter. Now, the company you're about to hear from has paid us for the production of this video, which means that this is not research, it's an advertisement, and you should treat it as such. Research is conducted by reading the company's official filings, and please only watch this if you absolutely know what you're doing. This interview is intended only for experienced junior mining speculators because mineral exploration, development, and mining is a very tough business where failure is the norm and should be the expectation. This is going to be a conversation that is general and impersonal in nature, containing forward-looking statements. I am not a licensed financial advisor, and my business sells content-producing services, which also makes me biased in multiple ways. So before continuing on, please talk to an independent investment advisor with a good long-term track record because your capital might be at risk. If you're not 100% sure you understand 100% of the disclaimers I just showed you, please go to the last section of this video and do not consume this content unless you fully understand and agree with everything said therein. That all said, Kavango's primary listing is as CAV, so that's KAV on the London Stock Exchange, but they're now also planning a secondary listing on the VFEX, that's the Victoria Falls Exchange in Africa, and hopefully more about that later on. On the LSE, though, Kavango's average 3-month volume is about 2.5 million shares. The stock's 52-week high is 1.6 pence, and its 52-week low is 0.6 pence. With a market cap of just under 33 million British pounds and 3 billion shares outstanding, today this is a 1.12 pence stock with a 50 and a 200-day moving average at respectively 1 pence and 0.8 pence, which means the stock is now trading above both of them. As far as I could tell, there are no warrants left anymore after April of this year, so the only dilutive securities here right now are about 150 million options, bringing the number of fully diluted shares to, well, effectively 3.2 billion, meaning an increase of just about 4.7% in shares outstanding could occur if all dilutive securities get exercised, which would then result in about a give or take 4% ownership dilution. If, and that's always a big if, but if all of those dilutive securities actually get exercised. However, if you do take into account the theoretical fully diluted case, which layers in the options, of course, but also the potential consideration shares and up to 1 billion shares for the new VFEX listing, the total would be about 4.4 billion fully diluted shares, which would be about a 43.5% increase in the shares outstanding and a 36% shareholder dilution. And of course, none of this accounts for potential share issuance down the road, which is not unlikely given that this company operates in what is a very capital intensive industry. A lot of shares, a lot of those shares that I was telling you about, they're held by insiders though. So for example, Pure Bond Limited, which we'll talk about later, owns over 70% of the company. Peter Winterby owns nearly 9% of it. And Ben, the CEO here, he owns about 0.5% of the company. Talking about capital, I'll now go through their latest financial statement, which shows me the numbers as of December 31st, 2024. So do note that this is over 7 months old now, and some things will be different. At the time, though, the company had in total about $2.7 million in current assets, mostly in the form of trade and other receivables to the tune of $1.1 million, and the cash and cash equivalents were about $580,000 at the time. However, worth pointing out, the cash situation has changed drastically since the effective date on these financials, as Kavango received a strategic financing of almost $9 million, as well as another convertible loan note facility to the tune of $5 million from Zimbabwe pension funds. And the RNS says they now have about $8.5 million of firm commitments under the VFEX prospectus. The non-current assets, though, they include about $24 million in the form of loans to subsidiaries, which that's going to become clear later on in the conversation, I hope. And the current liability side of the balance sheet, they had that $5.1 million on it, 4.8 of which is in that convertible loan notes that I was telling you about, and just about $350,000 in trade and other payables with no long-term debt that I could see. Moving on to the P&L for the end of December, Kavango recorded some revenue for a change, so that doesn't happen too often with companies I talk to, but they had about $500,000 or $445,000 to be specific in revenue. Although the cost of the sales was higher than that, but I thought it's worth pointing out, and it'll become clear why later on when I tell you what this company actually does or is planning on doing. In terms of expenses, the administrative expense for the full year was about $1.8 million, which is an average of about $150,000 a month. Whereas the exploration cost on here, they were recorded at about $4 million for the period, which is an average of about $330,000 US. That leaves the exploration to administration ratio at about at about 2.1, which means that just over 2 times as much money was spent on exploration costs last year than what was spent on keeping the lights on. However, the company is at a bit of a different stage and it's evolving right now. We'll talk about that, of course. So those numbers are likely to vary, which is why I'd encourage viewers and listeners to consult the company's official filings and the new filings once they're available on their website. Enough accounting for now, though, because I've got a brief company overview for you here, and there is a lot going on. But in a nutshell, Hillside is the company's flagship asset. It's located in the Filabusi Greenstone Belt in Zimbabwe, where they're looking for share-hosted gold, which they want to run through a small CIP plant, with the goal being near-term cash flow, which they're actually targeting for Q1 of next year. So very briefly here. There's also the KSZ magmatic nickel copper PGE target in Botswana, in the Kalahari Copper Belt, more specifically, where Kavango holds the second largest land package, but more about that later on or in the latter part of the conversation as well. And really, for this to become a conversation, I might have to consider shutting up already. And Ben, I'll give you the word here. But first of all, thank you for sitting down with me today.
Thanks very much for having me, Antonio.
Pleasure's all mine, and I am looking forward to the conversation because it is a bit of a different story than what I typically get to cover. So it is interesting to me. And since this is your first time on the barbecue, we'll have to go through the smell test first. But just maybe before that, just right off the bat, given that again you have 2 assets, 2 jurisdictions, 2 different geologies, 2 different end game strategies as well. When you look at that, what is Kavango right now? I suppose, like how do you pitch this to an investor in an elevator, I suppose?
We're a near-term gold producer with significant upside potential in our gold projects, together with our historic exploration play in Botswana.
So that's a short elevator, right? Which I appreciate. I don't like elevators, but so you want to make money by producing gold in Zimbabwe and then provide upside by making discoveries in Botswana's Kalahari. Is that about right?
Kind of. We actually see the upside in the business here in Zimbabwe. Zimbabwe for the last 25 years has been pretty much untouched in terms of modern exploration. Yet this is one of the world's premier jurisdictions for gold mineralization. The history of Zimbabwe, there's been a very rich heritage of gold production in this country, but because of various issues at surface level, this potential has just been left untouched for over 2 decades now. And we are one of the first companies from one of the major markets to come back into Zimbabwe, pursuing modern exploration in these gold fields. And our results have been absolutely phenomenal so far with what are actually really quite small projects in terms of the land area.
Plenty of there that we'll be back to, definitely jurisdictionally as well. We're going to do that towards the latter part of the conversation because the barbecue is almost at temperature here and we still have to do that smell test. And I'll be starting off with the man running the company himself, and particularly interesting in your case because you didn't found this company, if I remember correctly. So yeah, who are you and why do you think you're the right man for the job?
So my name is Ben Turney. I've been the CEO of the company since January 2021. I originally joined the business as a consultant in early 2020 when the company was really lacking a bit of direction. Former directors hadn't really got the message across what they were doing in Botswana, and they were really struggling to raise any money. So a bailout financing was put together in early 2020, just as COVID was taking off. I was asked to join the company by the investors to help them fashion their message and try and present to the market what was good about this business and the exploration projects that we were pursuing. That went very well. We were very helped by market conditions over the course of 2020. And by the end of the year, I was able to raise £2 million for the business at about a 5 times premium to where we'd been when I first joined the company. Mm-hmm. Now, from that point onwards, things had gone very well with the company and the board was looking to retire. The directors were older. They were at the end of their careers. They wanted to inject some fresh blood into the board. So they asked me if I would join the company together with David Smith, who was the the chairman. David actually recently retired as well after 4.5 years at the helm as chairman. So I joined the board with David in January 2021. We led the turnaround from that point. For the next 18 months, we carried on in Botswana. But despite our best efforts, and our team really did put a huge amount into the work on the ground, we just simply weren't getting the success that the quality of work really deserved. So Botswana is a very hard jurisdiction to explore in. There's a lot of sand cover there. About 70% of the country is covered by Kalahari sand. So we were pursuing a geophysics-led exploration strategy. And for a company of Kavango size, I think we'd really bitten off more than we could chew. So I'd been looking around for other jurisdictions to move into, and in summer 2022, I came and visited Zimbabwe for the first time. And I got off the plane down here in Bulawayo. I spent 5 days out in the bush with a very experienced exploration geologist. He took me to a number of this area's greenstone belts, which host the gold. And I just couldn't believe what I saw. Everywhere we went, I saw prospected project after prospected project after prospected project. And that is the key point about Zimbabwe, is that not only is there an enormous amount of gold in this country, a lot of that gold, I believe, from an exploration perspective, as to all intents and purposes, has already been discovered. Because the prospecting has been done by the small-scale mining and near-surface mining that's really kept Zimbabwe afloat during over 20 years of economic difficulties.
Tell me though, Ben, so you're originally from London, right?
Correct, yes.
What was your wife's reaction when you told her, you know what, I'm going to take over a struggling LSE listed company and we're going to move to Botswana?
Well, it was actually moved to Zimbabwe. It was even better than that. It was quite an interesting conversation, but I've got to say, she's got the heart of a lion, and she's followed me down here, supported me all the way. It's obviously been draining at times for both of us, but she's done a huge amount within the business. She has a background in marketing, so she has done a lot to help establish ourselves down here. She has been incredibly supportive throughout, I've got to say. But yeah, it was certainly interesting conversations at the very beginning when I had to present this wonderful idea to her.
Well, if you were able to sell her on that, then that gives me confidence already. So you're lucky, man. What about is that the only thing that you do right now? Do you currently have any other positions, executive board, or anything else that you're doing right now?
No, I'm exclusively focused on Kavango. We've found ourselves in an incredibly blessed position, frankly, over the last few years with the support of Pure Bond, our major shareholder. Pure Bond is one of the family vehicles of the Consagra family, and they've invested £20 million into our business over the last few years, which has enabled us to make the progress that we have down here in Zimbabwe. So as part of their commitment to us, in return, I reciprocated, and I've given them my firm commitment. I'm giving my all to this business, which is why I now live down here in Bulawayo, lived down here now for about 2.5 years, and have led this business from the ground. But it really is thanks to Bula and Ramesh Consagra that we are here today. It's been at times a difficult journey, but they've really stuck by the company. They provided us with the financing we need, and we're now on the cusp of building what I believe is about to become a very, very large business indeed.
Well, that is something that I wanted to talk to you about, because Pure Bond owns 70%, as I mentioned earlier, of the company, just a little over that. Who's really behind the company, or what is there that were they part of the founding team, or like how did they get that ownership? What's the story there?
No, so I brought the Consagra family in through Peter Winterby, who is now our non-executive chairman, back in November 2022. We did a financing at that time, and the Consagras put £1.5 million into the business. Now, Peter's working relationship with Consagras goes back about, I think, 5 or 6 years. They invested into his company, Kavango Resources, which is a Zambian copper development company that Peter, as a private business, took from pretty much nothing with the Mbula copper asset up to over £1 billion valuation as a private company. And the Consagras have been shareholders in certainly the second half of that journey. So they've known Peter for a long time. They had a huge amount of trust into him. Peter brought the Consagras through me into Kavango. In late 2022, I sat down with Peter and told him about the plans that I had for the company and that I wanted to take the business into Zimbabwe. And I think that really caught Peter's attention. Peter is very much a contrarian. Again, he's another man with the heart of a lion. He's had a very, very successful career across Africa and different jurisdictions in the mining sector. And he, I think, really liked the idea of returning to Zimbabwe. He actually started his career with Reunion Mining in Zimbabwe. So when I told him what I'd seen here, all of these prospective projects that really are available even today, it really caught his interest. So I was sent back here in Q1 2023. I came down, I did the due diligence down here. I found our first projects, and towards the end of Q1, I brought Peter and some of our other directors to come and see what they found. And from that point, we then took off. We went back to the Consagras. We made an approach to them for a further £6 million in financing to finance the exploration phase of our work down here. They agreed to that. They became our 52% shareholder at that point, and they've subsequently followed up with more financing since.
Mm-hmm. So how much money have they provided so far to the business? You said £1.5 million in 2022. Have they been participating in future financings or, yeah?
In total, with the money that they're about to put into the company in the financing we're doing for the listing on the Victoria Falls Stock Exchange, that will take them up to just under £20 million.
20. Oh, okay. I was wondering what essentially their goal or plan is for the company, and investing in this business. How do they make money on that business? Because obviously you don't want to have that as supply of shares in the market. So how do you manage that? What's their plan of making money on their investment?
Yeah, I know this is going to sound crazy in this business, but cash flow and dividend payments. There you go. How many times do you hear that from your people on your people on this show?
Not a lot. And I do have it on here to talk about how you plan on returning money to shareholders eventually. So we'll get to that point as well. Going back to you personally, the website says you only own about 0.5% of the company, which is not surprising given that, again, you joined the company after its formation. But do you have the ability and desire to increase that either through, open market purchases or financings or employee incentive programs? Or how are you going to align yourself with shareholders moving forward?
If I could just come back and answer that in a moment, but I didn't finish. I could just speak a bit more to what you asked about the Consagras and how they're going to make money. Obviously, there's a bit of a flippant answer: cash flow and dividends. If you look at the history of the Consagras, they set their business empire up in the 1970s, and they built their entire fortune based on dividend producing companies. So for them, the long-term cash flow is really what they're interested in. And the story down here in Zimbabwe, what I presented to them back in 2023 was that I believed we could very quickly make mineable gold discoveries because so much prospecting has already been down here. I saw the exploration risk in Zimbabwe as being negligible, not just to make discoveries, but discoveries you could bring into mining. Then because of the infrastructure that's here, the population that's here, it's got a very high level of education. Mining is very much in this country's DNA. There aren't many families in Zimbabwe that aren't in one way or another touched by mining. There is so much mining activity that's going on that is heavily capitally constrained and doesn't really take advantage of modern technology. So I believe the opportunity back then was for us to come in, make discoveries quickly, and then bring those into production. From there, we would then look to build out and either increase the overall output from the individual mines that we discovered, or based on the foundation that we built, take on larger scale assets. And so far, that whole plan has come together fantastically well. And we now are on the cusp of moving the business towards 250 tonnes a day production during H1 next year. But I know we're going to talk a bit more about that in a moment. To come back to my package, all of my shares that I own, I've bought and paid for in cash. Now, at the moment, I'm actually underwater on my position. So I've put over £250,000 into the business. I've backed all of the financings that there have been. I've bought shares on market as well. You mentioned the options that are outstanding at the moment. I must admit, I can't remember the exact number, but I think I've got about 55 million of those options. But this disclosure, of course, is in our financial reports. I'm obviously very, very committed to the Consagras, and for me, building this business has become genuinely a life passion. I've thrown my all into this. So for my alignment with shareholders, I'm the sort of person that takes the commitment that's been shown to me extremely seriously, and I'm damn well going to reciprocate for them. The Consagras have taken a huge bet on me personally, and I'm going to make this work for them.
I wouldn't assume this to be the case, but do you or them or anyone within the company personally own a royalty on any of the projects you have?
No one in the company owns any royalties on the projects. There are none of these clever little side deals that you can see in PLCs of owning surrounding ground, or sort of secret little undisclosed ways of spiriting money out of the business. I don't know if you know, Antonio, but I actually spent 5 years as an investigative journalist and shareholder activist uncovering fraud on London Stock Exchange. So for me, that is an area that is actually a personal passion. I did that during my 30s. So no, there's absolutely nothing like that. Everything that you see in front of you today, and your summary at the beginning, it sounds like a bloodbath. And compared to a lot of other companies with the shares in issue and the sort of the metrics that you presented, just taken at face value, it could look awful. But when you scratch away at the surface and you see what is actually underneath, this really is a thoroughbred that is just waiting to be unleashed.
Yeah. It's how much of the company could you locate if I gave you like 5 phone calls outside of you, Mr. Winterby, and Pure Bond?
Now that we've got the Zimbabwean pension fund joining the company, we can identify about 86% of the company.
Yeah, well, that's what I meant with or I think that's what you meant actually when you say that you dig a little bit further beyond the fully diluted. It will be almost 4.5 billion shares there, but a lot of that is already spoken for with people So that was an important one to see as well for me.
Not only is it spoken for with people we know, these are genuine long-term holders who will continue to back the business. The way that I frame Kavango is that although we are listed on the London Stock Exchange, the way I see it is we're very much more sort of, I think if you were to make a comparison, we're much more like a PE financed business, so private equity. Although we are listed, with the sticky holders that we have who followed their money, have enabled us to focus on growing the business rather than have to do the hand waving song and dance that so many promotional businesses have to do in this market. We've actually got in and built a business with a first mover advantage here in Zimbabwe that we believe is significant. We're moving towards cash flow. We've got a lot of potential in our ground that we've already proven. So it is a very, very exciting time for our company. The market doesn't get the model at the moment. I understand that. I've never seen a business like this with this kind of potential to move into not only into cash flow, but with the earnings potential as well. I've started giving the pitch to other investors that I view Kavango much more as a tech firm in terms of our earnings profile over the coming decade, as opposed to a mining firm. It is still possible in this sector to deliver outsized high growth, and I believe we are about to do that.
Then talk to me a little bit more about the rest of the team as well here, though, given that you have that, multiple strategies across multiple geologies. Who's on your technical team? Who's pointing the rigs? Who's taking care of operations? And do they have specific experience for the task at hand?
Absolutely. So when I first came into the company, I think our technical skills were not at the level that we needed for the type of projects that we were pursuing. So over the last 4.5 years, one of the areas I've been most dedicated to is bringing in the best possible talent to guide our strategy and also to deliver our operations. It's meant that we have been through quite a few people. This is a sector where the number of people who actually really do know what they're talking about and have actually made commercial discoveries. I'm not just talking about just discoveries, but actual commercial discoveries that have been made into mines is relatively few. So we have, if I start at the very top at the strategic level, we have Dave Catterall, who was the exploration geologist directly responsible for the discovery of the Zone 5 mine in Botswana that sold to MMG for $1.8 billion a couple of years ago. Dave is one of the world's leading experts on the Kalahari Copper Belt, and it was through that I got to know Dave. Now, Dave has got 40 years experience in exploration geology. 20 of those years are in the copper belt in copper, obviously, but Dave's also got 2 gold discoveries under his belt. He has another 20 years in precious metals, which, as it's turned out, has been a very happy coincidence, because when I first met Dave, Kavango wasn't even considering gold at that point. So Dave is one of those few people in this business who's actually got multiple discoveries that have been made or taken from greenfields projects or brownfields projects and actually made into modern mines. He's kept himself up to speed with the latest technologies, the latest methods, methods. And he's really helped guide our exploration strategy, both in Botswana today and also, of course, here in Zimbabwe, where we've had so much success over the last couple of years. Now, through Dave, we met a man called Craig Hatch. Craig is a mining engineer who actually oversaw the development of the large spiral decline mine at Zone 5. So that was how Dave and Craig originally met. Now, again, in another coincidence, the rest of Craig's career, Craig is a year younger than I am. He's got about 25 years in this market. He spent about 10 of those years in copper in Botswana, and the rest of his career he's spent in the goldfields of Western Australia. So he has a lot of experience, not only of building gold mines in in Australia, but the gold fields in Western Australia are almost identical to those gold fields that we have here in Zim. So Craig's technical understanding and knowledge of the challenges that we'll face when coming to make these mines, there aren't many better people in the market available for this kind of work. So between Dave and Craig, our overall strategy is extremely strong and led by the right people. Now, on the ground here in Zimbabwe, where we have our executive team, we've recently taken on a general manager from Barrick Gold, Everjoy Bramati. Now, Everjoy joined us a couple of months ago. He came to us from Barrick. He originally, he had been one of the mine managers at the Bulyanhulu gold mine up in Tanzania, where they were producing 4,500 tons a day. So to bring someone of Everjoy's talent and competence into the business has been a significant step forward for us as a company. We've also recruited a woman called Kermat Nur Mohammed. Kermat is a very experienced exploration geologist. She's from Tanzania. She's worked all over Africa in gold, primarily in gold. So she has an enormous amount of experience. And so she's now leading the team on the ground, working very closely with Dave, who's guiding the overall strategy. We've also recently recruited Alex Gorman as our COO. Alex is a former investment banker, but she did study to become an exploration geologist at university. She spent a year working in the field in Botswana, but then for the rest of her career, she's been working in investment banking, most recently as an analyst at Peel Hunt. Alex has actually been on our main board of directors for just over a year, and she's now joined us full-time to come and work on the business down here. So our executive team alongside me, we've strengthened them significantly. I should also mention Ian Sheesby, who we've recently recruited as our CFO here in Zimbabwe. Ian is a chartered accountant by background. He worked formerly with Prospect Resources, which is an Australian listed company that sold the Arcadia lithium asset for over $400 million a couple of years ago here in Zim. So Ian's experience here in Zimbabwe is extremely valuable to us, helping us not only sort of navigate some of the complexities around operating in Zim financially, but also in terms of securing investment returns for investors, making dividend payments and capital repayments out of the country through what's called the ZEDA license, which is the Zimbabwe Investment Development Agency. So at all stages, we've now got the right people in place. We've got a fantastic executive team working alongside me here in Zimbabwe.
That's a very neat summary. I think Kermit worked in Cote d'Ivoire as well, if I'm not mistaken. Yeah. Maybe I have the wrong name.
Yeah, no, she did. She actually, that's where we recruited her from. So she was most recently in Cote d'Ivoire. So you've obviously come across her previously.
Yeah. Still on the same topic, Ben, still within the smell test, still talking about incentives and specifically 2025 incentives. You're moving toward production in Zim. You're doing some exploration in Botswana, which again, we'll talk about. How do you measure success in the meantime for the company, for the people that you just told me about as a whole, though? And more importantly, how is executive compensation going to be structured to reflect that? As in, what are your KPIs going to be tied to?
So in Zimbabwe, our target is quite straightforward. We have just started resource drilling at our Billsluck gold mine, and our objective is to identify a resource that we can mine for 3 years. It's relatively shallow drilling down to about 5 level, which is down to about 150 meters vertical depth. The current mine workings go down to 3 level, which is about 90 meters vertical depth. So we're targeting a resource in the region of about 20,000 ounces. Now, that might not sound like too much to get excited about, because obviously obviously people are used to sort of 500,000 ounce resources. But the reason we're focusing on the initial 20,000 ounces is that that's what we're going to build our cash flow off over the next 3 years. So we're going to look by the end of next year to be up to about 7,000 ounces production a year, which for an exploration company, which is still very much in our DNA, it puts us in a very strong position because we believe we'll be able to fund and finance our exploration through cash flow generated from the mine. Now, the second area for this year in 2025, part of our mission here in Zimbabwe is to scale up in an incremental way. Rather than rush in and try and build an all singing, all dancing 1,000-ton-a-day plant, we've actually taken the view that what we want to do is to build our team up in a way that's at a pace that is sustainable and manageable for them. There are a lot of very hardworking, very talented people here in Zimbabwe, but they are relatively young. There aren't many people of my age here in Zim because of a lot of the economic troubles that there have been historically. Now, that, of course, leaves a skills gap in terms of the overall experience, but also leadership as well. So to help address that, our next objective is to build a 50-ton-a-day CIP plant. So we're starting off with a 50-ton-a-day. Effectively, it's a test plant because that will obviously start to increase our production, but more importantly, it gives our team on the ground more experience of mining and processing, as we then look to create and build a 200-ton-a-day plant that will commission during H1 next year. Those two plants together will take us up to 250 tons a day, but more importantly than that, it will have meant that our team will have had the experience to put those two plants into action, bring them into production, and of course learn all that they need to do about the practicalities of feeding and maintaining that plant.
Plants, multiple. If I get that correctly, though, basically you'd have the executives make more money if you can ramp up to that 50 TPD and then later 200.
Exactly. So I didn't answer that part of the question. Apologies. So yeah, you're absolutely right. So moving forward, executive compensation is all going to be tied to free cash flow generation and production. So we have incentive structures in place for our executive team. I'm currently discussing with the board exactly what my executive compensation should look like. I probably have left that a bit late in the day. I should have locked this down a lot sooner before any of this started to come into reality. But I've got a lot of confidence and faith that the consagras will look after me personally. So I've got no concerns on that front. But in terms of the rest of the team, yes, you're absolutely right. Moving forward, the story for Kavango is about building mineable resources. We don't want to create blue sky, large scale resources that no one would be able to finance to bring into production. We're following this incremental staged approach that I've described. And I think in the next 5 years, we will end up building a very, very large business this way.
The way you're going to finance this is interesting to me as well. So hopefully we'll get into that here later on. But this might be a good segue into talking specifically about that business plan here a little bit more in depth. And I know we've been talking about it briefly here throughout the first part of the conversation, but just to expand on that, or just to maybe make it more concrete. If I bought stock today, how am I going to make money on it? Like, is the idea for that money to be returned to shareholders via that dividend that you set? Is it going to be a buyback program? Do you reinvest in the business? Is it yes to all of the above? Yeah, talk to me about making money.
So in the first instance, we'll be looking to reinvest because we have obviously 250 ton a day production at one gold mine. Nobody is going to get rich off that. We've discovered at our Hillside project 3 gold mines. We want to bring all of those into productions with an initial production rate of about 250 tons a day each. We think that 2 of those targets have actually got potential to be much larger than that. So our exploration focus over the next 12 months is going to be proving up what might actually be at Night Shift, Steenbok and Bill's Luck. Those are our 3 main targets. In terms of the business model then moving forward, Hillside is very much our fortress. We're about to acquire the Nara project. Now, the Nara project, we're very excited about. We've identified 1.5 kilometers of gold mineralized strike. So it sits on top of 2 historic high-grade mines here in Zim. We believe the actual strike could be as long as 4.2 kilometers, and the depth of this system could run very deep. It sits on a major regional shear zone, which hosts a number of very deep mines that have been very large-scale producers. So there's a lot more work that we need to do at Nara, but we're very excited to be able to start moving down into that. Once we've got Hillside hillside up to the cash flow production level that we're talking about. So in terms of the business model then moving forward, again, we're following this iterative staged approach where we're building up one step at a time. When we get to the point where we are in a position to start returning surpluses to shareholders, one of the obvious mechanisms, of course, is a buyback, try and bring down the number of shares that are in issue. Obviously, the majority of our shares are in the hands of very tight long-term holders who also want to see dividend payments as well. Of course, we have to recover all of the losses that we've made before we can actually make dividend payments, or we seek I believe it's called a scheme of arrangement here in the UK. So there are some legal technicalities that we'd have to jump through, some hoops to jump through. But really the focus is on getting the business to a point where it becomes a long-term positive cash flow generator. And at the Hillside project alone, I believe we've got our company maker.
How far away do you think that is, returning that capital to shareholders? Again, cash flow in Q1 of 2026. What about returning that capital? How far away are we from that?
Best guess at this stage, I would hope during 2027. Next year is really going to be about building up the business, building up that cash flow. I would like to start to see some fundamental returns to shareholders from Zim in 2027. But of course, that all depends what happens in Botswana as well. If we knock it out of the park with the next phase of exploration and we are able to sell that project, which of course would be a dream scenario, then we would look to make a return, I'm sure, at that point as well. So there is that option that's on the table. In terms of the plan that I feel most confident in, that I know that we're going to deliver, it's what we're building here in Zimbabwe.
Does that mean for you, though, that how much money do you have right now? Like £8 million, I think last night I checked this. I mentioned at the beginning, I think it's, what about £8 million?
It's going to be slightly more than that by the end of this month, because we have $10 million coming in as part of the Victoria Falls Stock Exchange. And we're also in discussions with another pension fund that might also be coming in that will obviously further tighten up our book.
That's interesting as well. Really, why I'm asking this is because I'm thinking, does that mean that maybe you're not going to have to do any large capital raises before you can actually start doing that? Like before you're actually cash flowing, or how much more money do you have to spend before you're churning out cash?
It's an excellent question. And this is actually what I'm most excited about in this business. It's my hope that this is going to be our last major capital raise of necessity. Anything that we do in future will be by choice, because if this plan now works, that we're raising the money to get ourselves to this 250 ton a day plant, that takes us up to being cash flow positive at the PLC level. We've got a gold price model of around about $2,500, at which point we break even as a PLC, and that includes our exploration efforts in Botswana too. So this raise that we're doing now, this is a seminal moment for Kavango, and if the plan works, there won't be a need for any future capital raise. Now, of course, we are going to look to we will need to raise more money in the future to build the other mining and production sites. Our hope is that we'll be able to start accessing debt markets from next year. I wouldn't, of course, ever say that equity would be completely off the table, but we are already in talks with debt providers who are starting to do due diligence on us, who are following our business model very closely to see whether or not we can actually deliver what we're aiming to over the next 12 months. So my hope is that this will be our last raise of necessity.
Is it easy? It wouldn't be easy, but is it doable to find someone in the UK to finance mining still? Like, is that a thing, or would you be able to go and look for financings outside of the UK?
You've asked a very good question here. To my mind, the UK is increasingly impossible to raise money for mine finance now. If we look at the Consagra family and Pure Bond, we have been incredibly lucky to have had their support over the last few years. The fact that the two pension funds who are now coming into Kavango are both based down here in Zimbabwe, they're both based up in Harare. I think that tells a lot about the ability to raise money for this kind of venture in London at the moment. London is a very, very difficult market, sadly, at the moment. The most companies there are suffering. You talked about our volume at the moment. There's very little trade that's happening in London, and strategically that does pose a bit of a problem for us. Where I talked about our business being much more like a private equity backed venture, That's been extremely helpful for us. So we are keeping the London listing for now. The cachet I think that offers us, and also it helps build our reputation here in Zim. So the listing itself is actually a benefit to the company, but at the moment the London market is very tough to raise money in.
Yeah, that's something that I also wanted to talk to you about. So might as well do it right now. Then we'll be back to the conversation here, and it's going to make sense in a second. But do you list this on the ASX or the TSX, or would you be looking for a different listing after the Victoria Falls listing?
At the moment, no. We are obviously about to complete the Victoria Falls listing. The finance that we have is going to take us up to the point where we're cash flow positive at the PLC level. So that puts us in a very strong position as a business. At that point, we might look at other options in the future, but our focus now has to be on delivering our operational plan. To get into considering listing on another exchange, particularly one of the major exchanges with the associated regulatory burden and overhead attached to that, I think it would be a huge distraction from our management team at a point when this business is about to start delivering what we hope will prove to be significant cash flow generation.
In the risk of turning this into a whole nother podcast here, but what's wrong with the London Stock Exchange, and do you think it ever gets fixed?
How long have you got? I spent a number of years chasing windmills in London. I wanted to help build a better market. And unfortunately, all of those structural issues that I saw 15 years ago, doing the work that I did on the journalistic side and with the shareholder activism, none of these were ever really addressed. And I'm afraid to say those chickens have come home to roost. Ever since interest rates went up and the easy money came off the table, Brexit, of course, has hurt London a lot. We all know that. And at the moment, the cost of living crisis in Britain has been particularly severe. All of that has been underpinned by the fact there just hasn't been enough tangible success. There have been too many poor quality companies, particularly in the growth market on London, that just have not delivered. We've seen share prices go up and down in pump and dumps, but there haven't been many businesses, particularly in the resource space, that have actually delivered on their operational plans and built mines or built oil fields or actually created businesses that have delivered significant cash flow. It has, I'm afraid to say, it has all been a large Ponzi scheme for a very long time. And I don't see it getting any better unless there is significant desire at senior levels for a massive overhaul of the entire market. So I'm probably not the best person to talk to about this because I'm not London's biggest fan at the moment.
You know what's going to save it? Warrants. Oh, that's just me wearing my Canadian hat. I'm just kidding, of course, or a bit of a tongue in cheek there. But no, I went to London a couple of years ago, I think 2 years ago or something like that. And that's already too soon for me even thinking about it right now. So we understand where you're coming from. Let's go back to Zimbabwe in that case and talk a little bit more about operationally what you have going on. You're not you're not producing gold, but you're excavating dirt, if you will. You're stockpiling it. Bill's Luck, if I understand correctly. How's that operation going? What's the mill status? The not the mill status, but the TPD there. What like how much dirt are you kind of pulling out? And how's everything going?
Well, let me just correct one point there. We are actually producing gold at the moment. So
Oh, okay.
there are two aspects to our gold production today in Zim. The first is our own mining. Now, we are stockpiling the ore that we are pulling up from main shaft at the moment. But the reason for that is that when we took over the Bill's Luck project, Bill's Luck has cited on it a stamp milling operation. Do you know what stamp mills are?
Yes. Yeah, they're kind of like they're old, right? Like they're what
They're
100
old.
years old or something like that.
They're over 100 years old. Not many people are aware of stamp mills because this technology is so old. So we have 3 stamp mills that are operational. Now, as with a lot of projects in Zimbabwe, what we also had on the ground was a lot of community miners. Zimbabwe has suffered a lot of economic turmoil over the last 2 decades. And a lot of ordinary Zimbabweans have actually gone out into the field and started doing their own mining operations. Now, one of the great things about a lot of the gold ore that you find here in Zim is that even though the reefs are quite narrow by international standards, the free gold that comes out, these things are relatively easy, or the ore is relatively easy to process. So the free gold that comes out of even just the stamp milling operations can present, it's kept communities and the economy here alive. Now, Of course, the challenge for a company like ours coming into ground that we have is how do we work alongside that community to create a win-win? The last thing that we want to do as a foreign-owned business is come in and just simply kick people off the ground. That's obviously a path to disaster. So the strategy that we've taken has been much more innovative. And what we've set up is we're in the process of formalizing the relationship with the small-scale contract miners through a cooperative structure that we've been working on for the last 6 months. And as part of that, we've allowed the local miners continue doing their mining, and they are the ones who are using our stamp mill operation. So at the moment, we're producing just over 1,000 tons a month. Average grade is around about 7 grams a ton. So this is, the high grade they're pulling up was excellent, certainly in June. And from that, the way the business model works is that the miners get the free gold that comes out, and we keep the sands. We then process those sands through cyanide. And again, we have to be very, very rigorous in terms of our management of the cyanide tanks. I appreciate that internationally that is frowned upon a bit as a technique, but it can be done in the right way. And we make sure that we adhere to all the local environmental standards and actually perform better than those. But from that, we've been able to produce at the moment around about 2.2 kilos of gold a month. So the gold operation is actually doing not too badly at the moment. In the meantime, we're stockpiling ore ahead of the 50-ton a day plant that I talked about a little earlier. But what we're doing with our mining team, I've described this model of scaling up in an incremental way. We're developing our mining team so that they're increasing their production capacity. At the moment, we're doing around about 35 tons a day of actual ore, and we want to get up to about 55 to 60 tons so that we have a surplus that will fill the CIP plant from the 1st of October when we commission that.
That's actually 35. That's within expectations right now, I think, right?
Slightly ahead.
Yeah, it was 30, if I believe, if I understand correctly, that's what the expectation was. How much run of mine tons do you have on the pad right now?
We've got about 1,200 ton. Well, in total, I think we've got about 1,800, but we've mixed those into 3 piles: the high grade, the medium grade, and the low grade. We're just looking at the high grade and the medium grade. That's around about 1,200 tons at the moment.
Okay, so how many days of feed does that give you?
Well, based on 50 tons a day, that's around about 24 days at the moment.
Okay.
We're expecting to commission the plant by the 1st of October. We think that number will be up to, give or take, sort of just over 3,000 tons by the time we come to start. By the time we come to start production at the plant.
Okay, so the 35 you're running right now, that's kind of sustained TPD, right? That's not like a peak or whatever that you're giving me. That's what you've been averaging out. Yeah,
that's the average, exactly.
Okay, good. How's the head grade been? Because you said you have multiple piles, and how much of it are you actually recovering now?
So the sampling at the moment is showing an average head grade, I believe, for the combined high and medium grade. Combined high and medium grade is around about 2.7 grams based on the sampling. That's on, obviously. We think it's actually higher than that, but we're not processing it, so we don't know. We think we've identified a couple of issues with our sampling that we're currently seeking to address. In terms of the recoverability, we're looking through the metallurgical test work that we've done. We're looking at a recovery rate in excess of 95% through the CIP plant.
Okay, yeah, that's interesting, especially with the stamp mills that you mentioned there. How's that being from a safety perspective, though? I mean, I don't see any LTIs if I'm reading that correctly or announced, so I assume there aren't any. But yeah, how's safety on site?
So the stamp mills are, as long as they're operated and maintained in the right way, are pretty simple machines. As long as you haven't got anyone stupid, like putting their hand into the working parts, you shouldn't really be able to hurt yourself. We haven't had any LTIs. We have had a few near misses, as you would expect, but so far the health and safety, we have dedicated what's called SHEC down here, which is safety, health, environmental. I should remember what Q stands for, excuse me. But we have a dedicated health and safety officer on site. We have a huge focus on health and safety as a company. One of the things about the minefield, the mines in Zimbabwe, the gold fields, is there are a lot of injuries and a lot of deaths out there. So promoting modern mining and safer mining practices, that really is a core value for our business. It's very much part of our DNA.
What do you think is the biggest challenge here, though, between what seems like a rather brief period between now and the business, the business soaking up cash, if you will, and then the business turning over cash seems like a brief period, again, Q1 of next year. What's the main risk or challenge in between?
It will all depend on what the resource drilling tells us. Now, we've had fantastic results from the exploration drilling that we've done. We've had even better results from the underground drilling that we've done. But until we've got that defined mineable resource, none of us are going to be able to sleep easy. So we have a high degree of confidence in the project. But of course, until we actually get the results and we've demonstrated the gold is definitely there for us to mine, we always need to be thinking about plans B and C.
Hmm. Are you going to keep drilling, or when are you going to stop drilling? Essentially, when is that no longer going to be needed?
We're not going to stop drilling. And that's one of the great things about being down here in Zimbabwe. We actually own 45% of the drilling company that we're working with. So we took a strategic stake in that business. We imported a dedicated diamond drill rig and also a multi-purpose rig. So we have two rigs at our disposal. And it's our plan just to keep those drills turning. We've obviously looking at the initial resource drilling to get ourselves up to this give or take 20,000 ounce target. But of course, the market's not interested in that. The market wants to see, well, what is the long-term potential? A 3-year life of mine sounds pitiful, to be honest. We see much more potential in each of our mines. So our plan is then to continue more exploration, certainly down at Nara, but also to start to try and firm up the discoveries that we've made, both at Night Shift and at Steenbok. At the moment, I couldn't tell you which order we're going to mine those in. There's work that's going on at the moment. But between now and Christmas, our focus is on Bill's Luck and proving up these what we hope will prove to be this our maiden resource that we mine.
Steenbok is a Dutch word. It's actually if I mean maybe they have a different meaning for it, but it's actually an animal, which I also want to talk about later on in terms of wildlife. But how's, just to your point of drilling and machinery and all that, how's Zimbabwe from a logistics perspective, though, as in if you have to get something highly specialized, some kind of a part or something like that in the country, where would it come from and how complicated would that process be?
So Steenbok, it is actually it's a form of antelope down here, and it is a Dutch word. It's from Afrikaans originally, which obviously has its heritage in Dutch.
Yep.
But to answer your question, the supply chain here can have its challenges, but it's a lot more reliable, I think, than the outside world actually believes. I think a basic principle for success here is to keep things as simple as you can. So as much as possible, try to avoid equipment or machinery that is too sophisticated. So, for example, when we come to do the larger scale mining, this spiral decline method of mining, if you look at some of the latest Sandvik twin boom jumbos that are all fully automated with amazing software behind them, trying to bring that type of equipment here into Zim, I think would be a higher risk. So we would be looking for lower tech solutions to do the same job. In terms of getting things over the border, as with any country here in Africa, it can be challenging at times. I think a lot depends on what day of the week it is. And sometimes it's no problem at all. There are times I've driven over that border and absolutely sailed through. Other times it's taken hours for no apparent reason. So that is a little bit hit and miss. In terms of the administrative bureaucracy here, there are very well established processes and protocols that you have to follow. One of the lessons that we've learned in Zim in the 2.5 years we've been operational here is that you have to follow those protocols to the letter. So we've put a lot of effort into building up our administrative team to make sure that we do follow all the permitting and other requirements that are necessary. The power system here can be a bit of a problem. It's been pretty good recently. There were quite heavy rains earlier this year. But again, as much as possible, we want to insulate ourselves from the grid to reduce that risk. Now, the power needs for our mines in the first instance are going to be relatively low. We have backup generators that we can use. And we are looking at solar as well as a longer term solutions. But overall, our experience of working here in Zim is far, far better than a lot of people internationally, I think, believe of this country. It's a much more business-friendly jurisdiction to operate in than the reputation would suggest.
Well, power is something that I obviously want to talk about as well. I wanted to ask you if there's power infrastructure that you're going to have to put in, because again, a mining operation doesn't work with the same power that household might. So even if there is household power, is there enough power for mining operations? So yeah, talk to me more about that.
So all of our projects are fully reticulated, connected to the grid. We have already had to upgrade the transformer at Bill's Luck because obviously, as you rightly say, there are increased power demands. We put those generators in that I told you about as well. So far, the power outages haven't impacted on our business too dramatically. I mean, we have had a few, certainly last year when there was the drought and the Kariba Dam was quite low. So power here in Zim was a bit of an issue. But so far, again, by putting the right preparations in place, it has not been too onerously difficult to pursue. But our plan moving forward is to insulate ourselves from the grid as much as we can.
Well, you're mentioning the Kariba Dam in Zimbabwe. Talk to me about water as well. In the meantime, while we are in the topic, where's your water going to come from? What kind of permits do you have to get for it?
So you actually asked a very interesting question there about Zim on the permitting side. One of Zim's best kept secrets and one of its greatest advantages as a mining jurisdiction is that the system of gold claims, which are the legal structure for the projects, they are actually fully permitted mining licenses. Not many people around the world, I think, have really woken up to this. So the projects that we've taken on that we bought, even though we presented them to the outside world as exploration projects, they were actually fully permitted mining leases that are held in perpetuity by production with no spending requirements. So the permitting regime here in Zim is incredibly benign. That's how we've been able to move as fast as we have. We already have our environmental permits in place. So with those, we are able to access all of the water that we need. Now, the main one of our projects, there is a local dam that we are able to access that has a pipe which actually runs just to the north of our project. That's actually up at Steenbok. But for the rest of our projects, we're relying on water boreholes that we're drilling. The nature of the mineralization and the geology of where we are, we're sitting at the contact point between the Archean greenstone belts and the granitic intrusions, the granite hills. Now, that contact point is obviously fantastic from a gold exploration perspective, but it also can provide underground aquifers, particularly where the granite, the hard rock, occurs. So what we found through the water exploration that we've been doing alongside our gold exploration is we've identified a number of fantastic areas for putting water boreholes into. So we're going to be relying on that as our strategy moving forward. The other advantage is, of course, that these water boreholes that we drill help provide more water to the local communities. At surface level, we are working in quite an arid area, but the water table is give or take about 70 meters below us. So it's not too deep from a drilling perspective. So we are able to help benefit the local communities with this as well.
That's actually a very cool point, and it goes nicely as a segue into talking about that local community and how that relationship is going. What kind of permits do you have to get from them? Do you have those? Are there any? If there are, do you have them? And yeah, what's the relationship overall?
So again, from a permitting perspective, none. None of the issues which you see in other jurisdictions such as Canada, increasingly in Australia, the mining leases that we have, they are fully permitted. Of course, the relationship with the local community is absolutely vital to our success long term. The goldfields within Zimbabwe, they do have a lot of people who live within them, the existing communities, and it's very, very important that we pursue what is called the growth point strategy. This is one of the things I loved first about Zim when I first came down here. In Zimbabwe, they recognize that a mine as a means of transforming local communities, there aren't many better ways of doing that because obviously you can't move a mine. And if a mine is built and developed, then you start to see some shops, you might see a clinic, a better road, better power coming in, water, the kind of things that I'm describing. And they've described this as the growth point strategy. Now, the idea behind this was looking at the growth point strategy from more of a small scale basis. So where you might have small scale artisanal or contract miners, then you'd start to see communities grow up around those areas. Well, we're taking that growth point strategy very seriously, and we're looking to do it on a much larger basis. This is why we've set the cooperative up with the local miners that we're working with. We've already invested in local road infrastructure. We've improved the power supply, as I mentioned. We've been providing access to water and, of course, access to long-term, well-trained jobs as well. So we've taken our community engagement in Zimbabwe extremely important, seriously. we're not one of these businesses that goes around, beating our chests and virtue signaling about our CSR. We've actually kept a lot of this just under the radar. We see it as an integral part of our strategy. So where I think a lot of other companies, will like to talk about the window dressing that we do, we've done much more substantial work on the ground.
I just looked it up, by the way, and Steenbok is actually an ibex apparently, and it's also one of the it's what do you call it when like your horoscope thing? It's like a Capricorn. Anyways, to that point,
I'm glad I've got your attention and you're doom scrolling during our interview.
Well, no, I just you mentioned that, and I started thinking about. You mentioned something about the locust, and I started thinking about wildlife, which I want to ask you about. And I just noticed that a Steenbok is indeed an ibex. Do you have any of those? Are there any ibexes? Is that how you is that the plural of ibex? Anyways, do you have any of them?
I haven't actually seen any here where we are. I've seen them up in the national park up in Hwange. I have seen kudu in our area. Apparently there are zebra occasionally. There are leopards as well up in the hills. I've not seen a leopard. I'd love to see a leopard down here. It's the only one of the big five I've not seen since I've been in Zim. They do tend to keep themselves to themselves. Not far from where I live, there are rhinos, but we don't have those down in Philabuzi. But you do see wildlife out there. The bird life here is incredible. We saw 2 very large eagles on our way home from the mine today as we drove back. So Zimbabwe is blessed with a very, very rich and diverse natural wildlife here.
Well, great for the tourists, I suppose, but could that be a challenge for you? Like, are any of them nationally or worldly protected? Is this something that you have to keep in mind?
I think it is, because it's not only the wildlife. What we do particularly have to bear in mind are the local agricultural animals. So the cattle, the sheep and what have you, the goats. Not sheep, so there aren't many sheep here. I don't know why I said sheep, but the goats and the cattle. So we've part of the legacy of Zim's more recent mining is that when you go out into the field, there are a lot of holes in the ground that have just been left there that can run very deep. I mean, some of the shafts that I've seen, they can go down over 150, 200 meters. So those present a hazard, of course, not least to the local communities. On our ground, when we first took over, we immediately started rehabilitating. So we've been working towards filling in those holes and also fencing off areas as well. That work is by no means complete, but you're right to raise this. It very much is a consideration, and it's something that we are looking to improve as we develop the business.
You said you've seen 4 of the 5 big cats while you were there, and that also got me thinking about safety. Like, is it even safe to see them? What about other safety? I mean, just while in the city, Bulawayo, that's where you live. That's close to the project as well. How's overall safety on the ground is him?
I feel incredibly safe here. The country is very secure. It's got a very stable population. When you go south of the border down to South Africa, I feel a lot less safe down there. Being in Johannesburg or in Cape Town, you can feel quite threatened down in that part of the world. But here in Zim, there's nothing like that at all. You definitely have to be careful on the roads. The standard of driving here can leave a little to be desired. But other than that, it's a very welcoming, very friendly population that's very supportive of the work that we're doing. And particularly, I think, with the community engagement and the relations that we've built on the ground, we've been incredibly well received, and we're very grateful for that.
That's interesting. Especially the comment about South Africa. Obviously, they're going through some socioeconomic challenges. So that's interesting to hear. How's the again? You think of Zimbabwe, you think of maybe hyperinflation might not be the first thing you think about, but maybe Steenbok is the first thing you think about. But hyperinflation is among them. How's the country economically right now? How does that influence you?
It is actually one of the first things you have to think about here in Zim. So last year, I actually got to live through a very short burst of hyperinflation. And I've got to say, it was pretty disconcerting. I think the inflation rate was running at about 4,000% in the first quarter of last year. I'd be going to the shops to buy products, and the shops remained full, and the economy now, because of the prolonged periods of hyperinflation and the number of currency changes there have been since the financial crisis in 2008 and 2009. One thing about this country that I love the most is how resilient it is. Now, that resilience has been forced because of sort of the economic conditions here. But what you now typically find is that the vast majority of the economy is effectively dollarized, even though there is still the official currency, the ZiG. On a day-to-day basis, I've actually never used ZiG as paper currency, paying for anything in the shops or my fuel or anything like that. All international cards increasingly work here as well, which has been another noticeable change over the few years I've been here. But what really sort of caught my attention, I'm pleased to be able to talk about this. You're the first person to ask. During that period of hyperinflation in Q1 last year, I was starting to think to myself, at what point does this turn into trouble on the streets? Because prices were just, they'd hockey sticked upwards. And what I noticed was just how stable the population was here, because people have lived through it now so many times. They've all got their own side hustles, other small businesses that they're running, other things sort of alongside their jobs to supplement their incomes, whether that's growing vegetables, it's keeping chickens, it's having a business that's doing, I don't know, painting or whatever it might be. So there is actually an incredible resilience that's now inbuilt into the Zimbabwean economy. And that for me was a real lesson. From our position as a foreign direct investor bringing US dollars from abroad, the fact that we were able to keep our operations running, we were able to pay reliable wages has actually been an advantage in many ways, because we've been a very attractive employer for people to come and work with. So overall, it's certainly something that you do need to keep an eye on here. And you can obviously never say never, but from what I experienced in the few years I've been here, I'm not as worried about it as I was before I'd actually experienced it.
So for you corporately, that means you keep your cash in USD then?
Correct.
Okay,
So,
that's why you report that way.
and not only that, the product that we're selling, we retain all of our money in US dollars. In Zimbabwe, one of the key things to understand about our business model at Kavango and why we're looking at putting 250 ton a day plants at each of our projects, even though we think those projects are going to have a lot more potential, is that if an individual mine produces less than 20 kilos of gold a month, and that's not counted at group level, this is per mine, then you get all of your revenue in US dollars. So our strategy over the next few years is to build a series of 20 kilo a month producers, obviously to build up our overall production level, but keep our earnings in USD.
Right. Who do you sell to from Zimbabwe? Does the government necessarily have to get involved in that process, or what does that look like?
So you sell to the national agent, which is called Fidelity. There's no royalty here in Zimbabwe, but you typically receive about 95 or 96% of the spot price. So although there's no actual royalty, they buy the gold at about a 4 to 5% discount, which is how they make their money. And again, by global standards, that's pretty reasonable.
Right. Okay. It'd actually be good maybe if we can sit down one day and just kind of do a deep dive on Zimbabwe to better understand the whole country and how you operate there. I think that'd be beneficial, because I'm hearing a lot of good stuff and stuff that I hadn't expected myself.
Love to do
You
that.
mentioned the national park, by the way, there, Ben, Matobo National Park. That is, I think, that you're referring to, because that seems relatively close on the map when I open up on Google Maps. Is that how close is that? And could that be a challenge for operations?
So the national park is not near our operations, but for me, it's perfect because it's 10 minutes away from where I'm driving. Where I'm sitting at the moment. So it's about a 10-minute drive. We work in an area called Philabuzi that's about 70 kilometers to the southeast. So we're not affected by any of the national park boundaries, but the Metopus, which is just near to where we live, it's an incredible national asset, really stunningly beautiful, and it's great to be able to go and sort of spend time there in the weekends and go hiking and walk around. It is a beautiful part of the world. If you ever do come down and visit, we'll certainly take you out there to go and view it.
Do you have well, I just went to Canada and they had me carrying bear spray around, so I guess I should buy like panther spray or something like that when I come to Zim.
You don't need anything that dramatic. Honestly, it's perfectly safe.
I'm sure I'm forgetting to ask something here about Zimbabwe, but again, I know we'll be having more interviews in the future where we can follow up on the country as a whole. But I also wanted to talk briefly about what's going on in Botswana right now. So talk to me maybe about that. What's the state of the project there? What kind of work is happening right now? Where do you see that going?
So we drilled about 3,500 meters that we finished earlier this year, and our team's been working on the drill core. We've now come to understand that the targets are deeper than we initially anticipated. So at the moment, the work that we've been doing has been to do more geophysical surveying, to understand more about that data and to interpret it. But we're watching very, very closely the drilling developments that are happening immediately next to us. BHP has recently bought into Cobre. They're drilling a series of deep holes. We're waiting for the results of those. But over the last few months, what we've also been doing is we've been working with First Quantum very closely, who drilled a deep hole immediately to our north. We've run, excuse me, we've run a series of surveys over the First Quantum hole to give us the drill core control over our geophysics. And we've got results that we're hoping to publish on that very, very soon.
How big do you think a resource has to be? And I understand that's not an easy question to answer here, but how big does it have to be in order to be of interest in that part of the world?
Realistically, for the depth of the projects that we're talking about, we'd have to find a tier one asset. Now, if you look at the actual ground and you look at where we're positioned in the belt, it's our belief that those tier one assets do exist on the strike that we are on. The question is where they are. It's like putting the proverbial pin into a football field, hoping to find the target that you're looking for, because it's a very large area of ground. This is why the targeting now is so important, because this is not a project where you can just keep on drilling and drilling to make your discovery. You have to be a lot more precise because of the depth of holes that need to be drilled, and of course they need to be diamond holes as well. But it's our belief that we are in the right geological setting, that the results that we've had with some of the copper shows that we've had have certainly given us a lot of encouragement about the overall prospectivity of the system for hosting commercial scale copper mineralization. The question now is for us to be able to find those trap sites where the copper might actually occur in sufficient quantity to turn into large scale mines.
What are the early stage success criteria here, though, for what you have going on? Like, what is it that you'd like to already be seeing in the work that you're doing here?
In terms of what we've already done, what we've already seen, so we've identified the copper mineralization, we've identified these flat rock formations, we've identified the geophysics and the controls that we have. The geophysics does seem to be giving us a reasonably accurate picture of the subsurface geology. So far, from the proof of concept, everything is looking pretty solid. The next target for us is very simple. The copper mineralization in the copper belt occurs at the contact point between two formations. You've got the lower Dakar on the top, and underneath that, the Nguako Pan. So what we're looking for is that contact point. So we're targeting that in the next round of drilling. And if we hit that, that would be a significant success for us.
Well, you also just mentioned that it was deeper than expected. And that might be part of the answer to my next question here. But what about the kill criteria? Like, what would have you moving away from this target?
It's a very good question, because, of course, as with these types of greenfield exploration, you can always get just enough of a sniff of your target to keep you chasing after it and to keep burning on money. We're encouraged by what we've seen so far, and we're about to do another 3,000 meters. If we don't hit the Nguako Pan and the Dakar contact, I think that probably would be the decision point for us just to focus on Zimbabwe. But of course, you never actually know. One of the challenges that we're seeing is that these what are called isoclinal folds are now looking much steeper than we originally anticipated. We thought they were sort of smoother, like a range of hills if you're looking out into the distance, but they're actually more like a series of mountain peaks. Now, that's meant that the areas we've drilled so far, we've been targeting towards the bottom of the peaks. One of the questions we are looking to try and address as well is whether or not those peaks actually do come much closer to surface, and at that contact point between the Nguako Pan and the lower Dakar, if there's copper mineralization in that as well. So that's part of the theory that we're looking to test with the next round of drilling too. But I think in just very, very simple terms, if you're looking for a one-liner, it's to hit the Dakar Nguako Pan contact point and for it to be mineralized.
It's raining there now, though, if I understand correctly. So that program, when does that start?
Not as far as I know in Botswana at the moment. It isn't, not in the northwest. We are out in Karakupis. So we're out in the desert. But the plan is The plan is to start drilling a little bit later on this year. So yeah, we're out in sort of the desert area. I mean, it could be rainy. I just hadn't heard that, but we've drilled in the rain in Botswana before. We've drilled in the rain here in Zim as well. So the rainy seasons don't stop us. At worst, you might lose a few hours production if it's particularly heavy, but with shelters around the rigs and around obviously your crews and your geological teams, it's possible just to keep on trucking.
I can see the headlines. YouTuber says it's raining in the Kalahari Desert in August. I can already see it, by the way. But a good point on correcting me on that one. The what's the status of the licenses there? Anything that expires anytime soon, or needs renewal, or extra permits, or something like that?
So the permitting structure in Botswana is more complex than it is in Zimbabwe. For exploration licenses that are called prospecting licenses, PLs, they have a 7-year term that's divided into 3 years, 2 years, and 2 years. You've got automatic right of renewal up to the end of 7 years. And at the end of 7 years, you can get 2-year renewals at the discretion of the minister. Now, there has been a change of government in Botswana over the last 7, 8 months. So it's unclear the extent to which the new regime will honour the sort of the precedent that was set by the previous government, who did keep on renewing. So Sandfire, for example, has got some prospecting licenses that I believe are over 20 years old. But in terms of our licenses, for the most part, they are all relatively new. So we are coming up to some renewal periods, but we aren't anticipating any problems because they're within the 7-year period.
Mm-hmm. Given that pound for pound, it sounds much more complicated to work in Botswana than it is in Zimbabwe. Why not basically drop everything you have in Botswana and just focus on Zimbabwe and do more of what you're doing there now, but maybe at different parts of the country or different whatever, but just more of Zimbabwe?
Simple answer is because this next round of drilling could be absolutely massive for the company. With all the work that we've done and the progress that we've made, with what we believe we now understand about the subsurface geology and the structures, if we can hit that mineralized Dakar and Guaco Pan contact in the next phase of drilling, then we've got something very big on our hands. I think at this point, it would definitely be a mistake for us to walk away. It does put the company under additional pressure. Our business model in Zimbabwe is certainly much lower risk, with obviously a huge amount of upside. But because of where we are with this particular project, we're very keen to pursue that next 3,000 meters of drilling.
Okay. Same line of questions for Botswana as I asked you for Zimbabwe: national parks, protected species, locals. Again, it being in the desert, what can you tell me about that?
So Botswana's permitting regime is much, much tighter again. So you have to apply for your EIAs, your environmental impact assessment. So you have to submit your EIAs to get your EMP, which is your environmental management plan, approved. So it is, it's a more sort of administratively heavy system. One of the advantages of working in the part of Botswana that we're in is that there's very little population, and there isn't much in terms of wildlife in the northwest of the country either. There are large cattle ranches, so you have to have good relations with the local cattle ranchers. That's very important. And so far, our team has done a really excellent job of building and maintaining those relationships. But in terms of things like sort of wildlife and national parks, that doesn't affect us at all. At our Ditau project in the south, that is near a national park, so that is an area that we do have to be more mindful of. Our land is outside, and in that part of the world, there are a lot more lions. So when we build our exploration camp, when we do the work down there, we have to make sure that we have the very high the nets that you can't see through to keep the lions out of. Ditau actually means lion in the local language, so that's how that project was named.
I hope they're less curious than the bears in Canada that I saw, and I saw quite a lot of them. How accessible is that area? I mean, the area where your camp is and the assets.
It very accessible. The road network in Botswana is superb. But just coming back to the wildlife, I think one of the funniest incident report I've had while I've been here at Botswana was when a zebra bit one of the headlights off one of our trucks out in Bots. So you wouldn't actually believe it if you hadn't seen the photos. You can clearly see these teeth marks where this angry zebra has ripped off the headlights as it was crossing the road.
There's everyone thinks the zebra is just like a cute black and white horse, but they call them, people who know them, they call them hate on four hooves because they're
They are
incredibly
grumpy
aggressive. They don't
animals.
want you to be
They,
around them.
no, they really no, they are very, very grumpy animals. You've got to approach them with care.
Yeah, yeah. There's a video online. Anyways, we'll get into the details maybe another time. But they're absolutely aggressive, and that's a good point. Or a funny story there. How much of your budget is dedicated to Botswana? How much money do you have going in there?
Around about just under 10% at the moment. Our main focus is building the mining operations here in Zim, which is obviously, as you said at the very start, quite capital intensive.
That explains it. I mean, in terms of risk reward, then I think that's also a good answer to my question. Like, why not drop Botswana? It's like you have 10% of the money going there, potential for a large discovery. Why not? That kind of makes sense. Or are you going to be looking for?
Just while we're on that point about where our money goes, there was actually something you said at the beginning I did want to pick you up on. You talked about our ratio of exploration spend to
Yeah.
PLC overhead. Taken at face value, what you said was correct. But if you actually drill down into our numbers, what you'll see is what's being recorded to PLC level is actually quite a lot of exploration expenditure as well. So within that number, we've got about £750,000 worth of exploration spend at PLC. Now, the reason for that is that we have a number of consultants. I talked about Dave and Craig. We've got Jeremy Brett, who works for us in Canada as a geophysicist in Toronto. But there have been other expenses as well that we've incurred via the PLC, for example, paying for equipment coming out of South Africa that have come into our projects. So that was just one point I wanted to clarify, because I'd hate for anybody viewing this, it's quite late into the video, but for them to think that we're the sort of business that's got a huge overinflated PLC overhead and that's what we're spending our money on. Our focus is very much about putting as much money into the ground as we can.
What do you think then is your G&A, like your monthly burn? What would that be?
It works out probably at around about $80,000 to $90,000. So that's in
Yeah.
pounds. It's
Yeah.
about 60 or 70.
Okay. Yeah. So I said 165, I believe. I have it here somewhere in my notes. And then you said 750. So that will put you about 65-ish. Take that effect. So yeah. Okay. That makes sense. And that's what you're budgeting then going forward as well. Just covering marketing and corporate overhead and everything else.
Well, it's the regulatory burden. A lot of the money in London does get spent on lawyers and LSE fees and all that kind of stuff.
Yeah. Yeah. What do you want to be doing for marketing? What are you finding that works here? Why I'm asking is because, again, kind of an interesting story. I mean, African stories they resonate better with, in my opinion, Australians and Europeans than they do with North Americans. But then you're on the London Stock Exchange. So what are you doing for marketing?
We've actually eased back on marketing over the last 18 months. Market conditions have just been so dreadful. And because of the nature of our financing, as I said, we've not needed to do that sort of hand-waving dance that so many others have had to. I've characterized us as a private equity business that happens to be listed. So for now, my plan with marketing is actually to let the numbers do the talking. Once we've built that first mine and that production facility, we get ourselves to a point where we're standing on our own 2 feet financially. We're able then to expand out the business model. I think it's at that point that we're really going to start to see growth in our share price and also more market interest. I think trying to describe this business model to everybody, I mean, obviously, we've just had a long time to talk about it. So, of course, I'm still engaging with investors. I'm still giving that message. But the reality is that I think it's a market that has a lot of fatigue. They've heard so much nonsense from so many different companies over the years. False promises, false dawns, broken promises, failed dreams, the lot. There hasn't been much actual tangible success. And it's my drive and determination that we as a business are going to buck that trend. And once we've actually done that, that's when I really want to start talking about what we believe is the huge potential for us to grow our company, certainly here in Zimbabwe.
Yeah. Well, have you considered inviting some gingers over to Zim to take a look?
Absolutely. We would love to. The more people we can bring down, the better, because every single person I brought down here, apart from sort of being initially a bit terrified and asking questions about safety and do we need an armed escort from the airport and these sorts of things, which of course you don't, it's a very safe place to be. everyone who's been down here has walked away absolutely blown away by what they've seen, because it's not only coming out to see our projects, what we can also show you is just some of the other potential that exists in this country. One of the things I like to do on the field visits is I let the investors just go and talk to our team. I tend just to step out and let people go and, yeah, just talk to our team, our logistics and commercial team here in Bulawayo, our mining team and our exploration team. So you can actually hear from the guys on the ground who are doing all of this work. So, but yeah, absolutely, we would love to host you down here.
Well, I really do appreciate that. And Ben, I think I think I've kept you long enough. It's been a good company introduction. Again, I have notes about doing potentially a geological deep dive interview sometime in the future, as well as a deep dive on Zimbabwe, maybe Zimbabwe and Botswana in one episode. We'll see about that. But what am I forgetting to ask you though? What did you come here hoping to talk about that I failed to bring up?
In terms of the technical deep dive, we should get some people who know what they're talking about. So we should get Dave Cattrall on the line and Craig Hatch and some of our other team. I think that would be very worthwhile. We've covered everything that I hope to talk about today. So thank you very much for the opportunity. And I've really enjoyed this conversation.
Well, I have actually thought of something besides me keeping you up at night here for this conversation. What else keeps you up at night? I mean, nothing's really ever perfect. So what's your kind of your main thing from your perspective that keeps you up?
Well, as the CEO of a junior exploration company, it's always worrying where your next round of financing is coming from. So even though we've had the incredible support of the Consagra family and Pure Bond, that stress never leaves you until we have a business that's actually paying for itself. I will always be thinking sort of where do we go to raise the money that we need to get ourselves to that point. So that has been sort of certainly one of the major stresses of the last few years. Moving forward, of course, it's health and safety here. It's making sure that everything that we do in a way that is safe and that nobody gets hurt on our ground. The last thing I ever want to happen as a business is that we do have an LTI or God forbid even a fatality. And mining is a dangerous business, so that's certainly an area that we as a company are all very, very focused on.
That's a good answer, and I appreciate it. And I also really do appreciate you sitting down with me today. Thank you so much for your time, Ben.
Thank you so much for having me.
And as always, thanks to everyone for watching Resource Talks. I have a couple of more things to say, though. The fact that this company was interviewed here today does not mean that they're necessarily a good or a bad company. I'm not here to endorse nor attack anyone. I am simply here to ask some questions. If you find that I have failed in asking a question that you would have liked to hear an answer to, which will happen as I'm not an experienced interviewer, please let me know and I will try to correct that mistake in a future interview. As mentioned at the beginning, please understand that mineral exploration and development is an extremely risky business. Losing money is the norm and should be the expectation. This is a very complex sector, and the performance of individual companies typically depends on many different moving particles, including company-specific factors like geology, financing ability, and many others, really, as well as particles that are outside of the company's control, like geopolitics, macroeconomics, commodity prices, and many more, most of which are nearly impossible to fully understand. Moreover, these companies that typically get interviewed on Resource Talks are in the pre-revenue stage, which means they rely on the public markets for the financing of their operations, which could result in shareholder dilution. Furthermore, as a general rule of thumb, you'll be better off understanding that all company communications online, albeit this interview or their website and their presentation and their social media accounts, or even the social media accounts which you thought were your friends and then told you about a stock, everything really that these companies do is intended as marketing. And although I do not make buy or sell recommendations because there is a clear conflict of interest given the nature of my business, many out there do. And you should be aware of that inherent bias and you should be careful out there. That bias is not always going to be clearly disclosed with everyone out there. So it is safer for you anytime you're watching any type of company specific content to approach it with a dose of skepticism and assume that the party telling you about it is biased in at least some shape or form, because there will always be a bias. Again, albeit clear or not. So always ask yourself what the incentive of your counterparty is and never rely on them regardless of their incentives, but instead double check if what they're saying is true. The fact that I have no idea what I'm doing should already be clear to you at this point. I am not saying this to make jokes or laugh with myself. I just simply do not have a long enough track record of consistent investment profits. So I should under no circumstances be considered an authority on anything. Again, although this may sound amusing to you, believe me, it is not amusing and it is not intended as a joke. I'm simply pointing out a fact and warning you not to rely on anything I do or say. Unfortunately, at least to my understanding, nobody out there has any special abilities. The CEOs do not possess any superior knowledge, and they cannot know about what will go up, what will go down, or what will go in circles. Some people even believe that to be rule number one on Wall Street. Nobody really knows. None of us know whether any of the company's activities will result in a success, again, given that we're talking about high-risk activities where most of the times it ends in failure. Also, unfortunately, try as I may, I won't always catch all red flags or all challenges with the companies. So even if I did ask a few tough questions in here, don't rely on this being all of the tough questions. Again, these are complicated startups with many moving parts, and I am conflicted given the nature of this business. Therefore, I cannot guarantee the quality of anything presented in this video, and you cannot hold me responsible for any losses or damages stemming from the way you decide to use this interview. Viewers, listeners, and readers acknowledge and agree that the information presented herein did not constitute a solicitation or an offer to buy or sell any security or investment or to participate in any trading strategy. Resource Talks and all parties involved in the management of the business strictly disclaim any and all liability for losses and or damages, whether direct, indirect, special, or consequential, or other consequences, however so caused, arising out of any use or reproduction of the content published by Resource Talks or any decision made or action taken in reliance upon it. By consuming this content, all consumers vow to release Resource Talks and all parties involved in the management of the business from all claims, proceedings, or consequences. This is all to say, I know it's a lot of lawyer talk, but this is all to say that you shouldn't blindly trust me or anybody on the internet, and you should do your own research. If you don't understand everything in those documents, the chances of you losing money are even higher than they normally are in this space. And as mentioned earlier, the chances of even the best analysts in this sector losing money are extremely high, since this is venture capital and it is not for everybody. I'll leave you with one of Charlie Munger's quotes, which I wish I had listened to more often earlier on, which says, quote, "If you don't understand it, don't do it."